back on Morning Trade Live. Let's focus on Carvana now. This stock has been on quite a ride. The last 3 years, trading at just over $3.50 a share in December of 2022, which is a far cry from this past July's all-time high of more than $400. We've pulled back 25% from that high, but shares are still up more than 50% in 2025. So that's a look at the chart. Let's take a look at other car retail stocks are in this space, and Carvana is flying high today, up almost 7% off the back of this upgrade. AutoNation also high by 1.2%, and we've got CarMax also 0.6% high. So it's a good day across the board for some of these used car retailers in the space at the moment. Carvana, though, is the focus of the morning trade. Joining us now for a closer look at this name is George Tsilis, a senior markets correspondent. Very good morning to you, George. So Wedbush has upgraded the stock this morning to outperform with a $400 price target. Yeah. What is behind this analyst call, George?
Well, I think a couple of things going on. You mentioned the year-to-date performance of Carvana. This company has actually generated some improving unit economics. It is now profitable. Last year, they generated around $629 million on $18 billion in sales. That's meaningful considering, they hadn't been profitable for many years, and that's really a reflection of the stock price increase, specifically in the last 2 years, as they generate a lot more sales. Many of their competitors like Vroom, Shift have gone bankrupt, and Carvana has really been growing its total sales as well as the profitability of those sales. And if you look at Wedbush, their call with their price target increase to 400 from 380 is really about an opportunity potentially here for Carvana, considering the stock has pulled back from around the $400 range in the last month or so. Since early October, the stock has pulled back about 23%. They see the risk reward right now is quite compelling, as well as potentially some limited downside risk to the name from here. It seems to be bouncing off its 200-day moving average. For what it's worth, that's a technical area of potential support. But they also see potentially some revision in the earnings estimates going forward. And if you look at the estimates right now for this year at around $5.47, they are expected to earn next year in 2026 for the full year at around $7.35, which places the stock around 42 times next year's earnings.
Okay, a good look at Carvana there, and the reason behind Wedbush's call today. Thanks so much for that, George Tsilis. We'll check in with you a little bit later. Let's trade it now with Charles Moon, stock strategist at Prosper Trading Academy. Very good morning to you, Charles. Happy Monday. How are you approaching your example trade for this name?
Very aggressively with the shortened week, and obviously with all the turmoil that's been in the markets. I like to be kind of in and out of the stock. So I'm looking at the December 5th 335 contract. I like to buy the contract at 760 or lower. Now, the upside price target is going to be short-term, right around 340 to 345. I believe they could get as high as around 353, where there's a small gap fill, which is usually a transparent profit-taking level for buyers or sellers, depending on direction of the gap. But the previous gentleman, pointed out a key technical level, the 200-day moving average. That's at 303, and just above this level, this 310 level has gotten a lot of accumulation in the stock in recent sessions. So it's fallen back to test this level multiple times. It keeps rebounding. I believe that this market does get bullish off of the heels of Fed Williams and Fed Waller's possible December rate cut. This is a stock that's going to benefit greatly as well. So I really like the upside momentum. I'd like to attack this. I believe the risk is going to be around 65% of the contract, but I believe that the return could be over 100% in the short term. So this is a very aggressive type of setup. This is a high beta name, but I really like the opportunity here.
Okay, Carvana shares are trading at 7.5% higher in trade right now off the back of this analyst call. Charles, just want to get your sort of overview of the markets today. Shortened trading week, but we are looking like we are positive across the board here. We've got big cap tech very much rallying today. Names like Alphabet, names like Tesla as well. What do you make of it?
It's purely off of Fed Williams' comments and Fed Waller's follow through today. If we look at the CME Fed Watch, we were sub 40% last week until those comments came out, and now we're pushing around 76, 77% certainty that the Fed is going to make a rate cut in December. all of this really leads to a lot of, uncertainty. And, generally in times of uncertainty, traders and especially Wall Street tends to be pretty swift. They tend to be a lot more shorter term in and out. They don't want to have that exposure to news, both positive and negative. But ultimately, the market's been very responsive. We've seen a lot of the growth stocks coming back over the last few days. In particular, especially around the AI sector. And, anytime we're seeing these names lift and catch a bid, that's always going to be good for the broad market rally. So, as long as that maintains, I'm still thinking we're going to go up. If the Fed watch still remains at greater than 60% certainty, I think that's going to be really bullish. And maybe this is the start of the Santa Claus rally that we've been looking for.
Yeah, I mean, my previous guest seems to think so, at least looking at a rally into year end. And we are seeing tech leadership back, I would say, without NVIDIA this morning, which is just lower fractionally, which is interesting. So thanks for getting us across your thoughts on the market, and also Carvana today, Charles. Talk to you a little bit later. Charles Moon, stock strategist at Prosper Trading Academy. Coming